What's up, guys? Johnny here. Today I want to talk about the power of compound interest. I feel like it's something that you definitely don't learn in school, and it's something that I've been blessed with. I'm 30 years old. I started investing in stocks when I was 18 years old. I joined the military, and I've maxed out my Roth IRA basically every year since I was age 18. I used the TSP when I was in the military, and that's the thrift savings plan. And they give you like an employer's match. I think it's like 4 or 5%. So I got that every year while I was in the Marine Corps for 5 years. When I got out, I obviously stopped that, but I still invested about. I always maxed out my Roth IRA, and then I always did about probably 10% just into like a normal brokerage account. And I've done that for 12 years basically. So I wanted to show you guys what my portfolio looks like, not to brag or flex, but just to show you what time can do for you if you just stay consistent. And this goes for like any walk of life. Like it could be your relationship with your spouse. It could be your time in the gym. If you track this stuff and you stay consistent, it's like magic. Like just time will work wonders for you. So I have my Charles Schwab account pulled up right now, and there's a balance of $174,147, and it says that I've had a cumulative rate of return of 142% from May 27th of 2020 to April till today. And that's an annualized return of 16.18%. I don't really know what that means, but 16.18% sounds pretty good to me. And I don't do any research. I mean, I listen to CNBC every now and then on the way to, the gym or whatever. I don't read charts. I just invest in basic, boring S&P 500 index funds. I don't pay a fucking financial advisor. I don't believe in giving them 3% to do nothing and just, move my money around. I just go with the 500 best companies in the United States because I believe in the US and I believe in business, and I let that do its thing. And I check it, once a month and whatever. Sometimes it's up, sometimes it's down. But I know over the last 12 years, it looks like the chart looks like this. So that's what's really cool about letting time and consistency work for you. So yeah, that my Charles Schwab has about 175,000. That's dispersed between my Roth. That's includes a brokerage account for my wife and I. It includes a couple accounts I set up for my kids. I have 3 kids, so that's something that I wanted to talk about too. Like, as you have children, just set them up a little brokerage account and throw I think I do like $100 a month per kid, and it doesn't have to be 100. It could be 10. It could be 50. It could be 1,000. Whatever your comfort level is. But just let that thing build, and then when they're 18, if they choose to go to school, then they can use that or whatever they want. So that's really cool. So my Charles Schwab has 175 between all the accounts, and then let's see here. I have an ADP profile 401k with Valet Parking Pros, my employer technically. And that one has about 75,000 in it. And if you're gonna work for a company and they have an employer match, I highly recommend you invest the minimum to max out that match. So it could be 5%, it could be 10%, whatever it is. My company, we offer a 4% match. I don't necessarily know how much you have to invest to get that match, but I would recommend investing that because it's free money. Like it's a free 4% that you're just throwing away if you don't do it. So get used to maxing it out. Just let time do its thing. And the cool thing about stocks is, you can just pick these funds and they just mimic like the S&P 500 or the NASDAQ or the Dow, whatever. You can pick sectors that you're interested in, but just stay consistent. Try not to cash it all out, because if I just sucked it all out to go do something with it, then I have to come into the market at today's prices, and that kills all the compounding benefits. So it'll be really cool to see where it is in another 10 years. In fact, let's just go on ChatGPT and let's see. If I have 225K invested in S&P 500 index, what would that be in 10 years if I keep investing, let's say 12,000 a year, and it earns 8% dividends reinvested. Boom. Says here between the investment, like growth, like the gains and the contributions, that 225 would turn into 660,000. So that's pretty cool. Now let's say 225K for next 30 years. 12K per year at 8%. Dividends reinvested. This is like what I would actually do. Like if I have 225K sitting in my accounts and I'm investing for the next 30 years, which I probably will, 12,000 a year, that's doable for me, and 8%, that's very conservative. It says the total after 30 years would be 3.62 million. So, with inflation and whatever, maybe the buying power of 3.62 million might be less, but you get the point. Like if you just 12,000 a year for the next 30 years, that's very doable. That's 12,000 a year divided by 365. That's $32 a day. Sounds kind of like a lot. Let me redo that. 12,000 divided by 365. Yeah, so it's $32.87 a day. It sounds like a lot, but if you're making 150K a year or 120K a year, 10% of your salary, just fucking invest it. Forget about it. Just pretend like it's gone. That's how you're gonna, help fund your future. So I hope that's helpful. Some other things I wanted to talk about was credit cards. Like I haven't used a debit card in probably 12 years. I only use credit cards, and I love to get the points. It helps, especially if you own a business, it can help get free travel. What else? Yeah, it's mostly for the travel and the points, but only use them if you're gonna pay them off every month in full. Like I never carry balances, I never pay interest, I never pay late fees. So once you start doing that, then the credit cards are absolutely worthless, because then you're paying like 25% interest and all this crazy shit. So do credit cards if you're disciplined. And then the last thing I wanted to talk about was like lifestyle inflation. So let's say you're working, whatever, you get a nice cozy job making 150, 200K a year. Now you feel like you got to upgrade the car, you got to upgrade the apartment, you got to do all this stuff, get nicer stuff. Just don't do that. From experience, don't do that. And if you're getting a nice salary, max out your retirement, start stacking cash for like an emergency fund, pay down any student loan debt you have. That's the worst. Get rid of that. Get rid of any credit card debt you have. And then do that for a year or two, and then let your investments buy the shit you want. Let the investments pay for the fancy car and the Gucci bags and the trips and stuff like that. So hope that's helpful. The compound interest it's really cool, because I'm just starting to see the benefits of it at age 30. Still got a long ways to go. And it's not just for money. It could be for relationships. It could be for business. It could be for fitness. It could be for your faith. So take the compound idea and apply it to all aspects of your life. Hope this helps. Comment, share with somebody, and we'll see you in the next one. Peace.